Employer's Loan Program Policy. For illustrative purpose only. In 2014, the Board of Directors for a Better Workplace recommended the establishment of Employer Loan Program. Under the program, emergency loans are eligible to employees for reasons of a severe financial hardship for which the employee has an immediate need for financial assistance. There may be occasions when emergency circumstances, defined as unforeseen, unplanned, and unavoidable events, demand immediate attention and require an employee to secure funds on short notice. Examples include a family medical emergency, threatened foreclosure or eviction from a primary residence, or termination of utilities. The following criteria apply to the Employer Loan Program. Loan amount. The maximum amount of loan is 3 months' salary, minimum 1 month's salary, subject to availability of funds. An eligible employee may get a loan of up to his/her 3 months' gross salary. Interest on loans, none. Loan frequency, 1 loan per 12-month period with no previous emergency loan unpaid. The 12-month period begins on the date the employee gets a loan. No more than one loan may be granted in any 1 calendar year. Loan approval, CEO and CFO. Term of loan, 6 monthly pay periods. Not to exceed 12 monthly pay periods. Interest-free loan will be recovered in maximum 12 equal monthly installments from the month in which the amount is paid to the employee. Repayment, payroll deduction. The HR team shall ensure that the total liability of an employee towards repayment of loan does not exceed 20% of his/her gross salary. Termination. The outstanding balance due will be due and payable in the final paycheck if an employee terminates his/her employment with employer for any reason before the entire loan is repaid. Eligible employees, new joiners or permanent employees. Temporary or part-time employees are not eligible for loans. Procedure statement. Request. Employee contacts HR team to apply for an emergency loan. Employees requesting an emergency loan must submit an emergency loan request and authorization for payroll deduction form, which includes identifying information, the circumstances of the request, the amount requested, the proposed plans for repayment using payroll deduction, and a statement of loan terms. Approval documentation. Loan requests approved by CEO and CFO will be documented on the emergency loan request and authorization for payroll deduction form. The form is signed by the borrowing employee to indicate agreement with the loan terms and the obligation to repay. Disbursement. An emergency loan account will be administered by the HR team. Upon approval by CEO and CFO, the HR team will ensure that payroll deductions are taken and documentation, authorization for payroll deduction by employees, is maintained. Payment to the employee for the loan amount will be within 5 working days after approval by CEO and CFO. Repayment of loans. Loans are repaid through payroll deduction. A copy of the emergency loan request and authorization for payroll deduction form is transmitted to account department to establish the payroll deduction. Loan receivable records. The HR team will maintain the loans receivable records and prepare a monthly reconciliation of outstanding loans. The author of this video is jobless for 15 months, has a bank loan for $50,000 US. The loan was taken for someone else, and that someone ran away. The author is facing prison and has a disabled daughter. Any help will be highly appreciated.